Hi, I'm Pattu from Free FinCal, and in this video, let's review the performance of Quantum Long-Term Equity Value Fund. I had conducted a poll at Facebook group Asan Ideas of Wealth, and this was a fund that many people wanted reviewed. I had written about it in July 2018. I think the performance of Quantum Long-Term Equity is dipping. Should I be worried about it? That was the title of the article. Description is the link is in the description box. This is a fund that I hold for my retirement. About 1/3 of my retirement portfolio is in this fund. This is the investments that I've made in the fund and the value of the fund over time since February 2013. The XIRR is not great. The annualized return is not great. It's just about 10.99% or 11% or so, which is okay. But the USP of its fund is low volatility. This is a kind of a contra fund in the sense that whenever the market is zooming, this will not move too much. But when the market is plunging, it will protect investors from a fall. So whenever there's a bull market, people will start saying this is a useless fund. And whenever there's a bear market, people will say this is a great fund to hold. So that's how this fund operates. So this is a value oriented fund in the sense that it will only pick stocks that are found below its intrinsic value. It can pick stocks from the top 200 stocks of the BSE. So it can pick stocks from the BSE 200 index, but I don't like the fact that it is benchmarked to the BSE Sensex Total Returns Index. Of course, it was one of the first mutual funds in India to benchmark their funds with respect to a total returns index. I have seen AMC heads talk about extra alpha coming because their fund is indexed to price indices and not benchmark indices. So in that sense, Quantum Long-Term Equity has always been a trailblazer in terms of good governance overall. It on its own, it had reduced its expense ratio and so on some time back. But of course, because of the mutual funds EA campaign, because of popularity of mutual funds, and of course the advent of direct plans, the relevance of Quantum Equity as the first direct-to-investor mutual fund and low-cost mutual fund has kind of come down. And because it does not have distributor support, the AMC itself has not grown as much as it should, and also when SEBI increased the net worth to 50 crores, if I recall right, of a mutual fund company, they had to sell part of their share to a Canadian firm. So it's not a very popular AMC, and it does not have too many popular funds. This is in fact the only fund which has got a AUM of about 900 crores. So none of its funds have an AUM of more than 1,000 crores. I don't remember the AUM of its liquid fund. Probably there is probably a little more. So that's the problem with this fund. When the market starts moving up, much before the market, the bull run hits a peak, it will start moving into cash and it will start underperforming. And so people will start complaining about this fund. And then whenever it feels that the bear market is going to end and the market is going to pick up, it will start moving out of cash into stocks. It had done that, I think, a few weeks ago recently. So it will be a very frustrating journey for the investor who sees portfolio every day, who wants performance in 1 year and so on. Such people should not be investing in this fund. This is for I would say this fund is not suitable for many youngsters. I think if you're 40 plus kind of, or 35ish, if you're a little more mature, and if you just want reasonable returns at low volatility, then this is the fund for you. This is hardly the best fund in any of its category. That said, if you compare the rolling returns of the fund with Nifty 50, it has done reasonably well. There are pockets of underperformance here and recently and so on. That's over 3 years, and over 5 years it has done a little bit better. But of course, this recent performance has been a bit worrying. And over 7 years, a little less data, but whatever data is there, it has done okay, decently. The performance, the quantum of outperformance has dipped in the last couple of years, but well, you can't say much about it. I'm not showing you the volatility as I usually do because take it from me, this is a low volatile fund. It will be much less volatile than Nifty 50. If you are not convinced, you can look at the review of Invesco Contra Fund where I have used this as a peer comparison. So now I'll just move on to value research and Morningstar pages of this fund, and if you see the last 1 year performance, if you see the last 1 year performance, you can see how the fund has more or less been flat. So that's why I said it will move into defensive positions when the market is much before. See if you say that's the peak of the bull run, much before that peak, it will move into defensive position and it will test your patience. So you can see that if this lack of performance has been there for quite a bit, almost 2.5 years, right there you go. For the last 2.5 years, almost it's been bad. But if you extend it a little bit, and then if you see the 3-year window, then you can see that the Sensex has been a lot more volatile, but the fund has been steady. So that's why I said you need to keep the faith in this fund for at least 5 years. Otherwise, it will not work. So for 5 years, if you see the rolling returns very quickly like this, it's done decently. May not have bet everything, but it has done decently. So you need to be an investor in this fund for at least 5 years to see some kind of performance, but in terms of return. But in terms of volatility, the performance will be there on a daily basis. It will be less volatile on a daily basis. So that is the nature of the fund. So don't get into this fund without understanding its nature. So this is the 3-year return. So if this is the I've gone to Morningstar now, and this is the risk and trading tab. And this in this 3-year frame, you can see that it is the risk will always be lower than the category, but the return is average, and you can see the risk versus return profile. So this is the risk, the standard deviation in the x-axis, this and the return. The center of the graph will be the index, which is BSE 500, and the category generally has been the category average has been higher than the index in terms of risk, but a bit lower than the index in terms of the return. And over 3 years, it has been lower. This is a low return, low risk kind of fund. Over 5 years, it's matched the index in terms of return, but at lower risk. The category has produced higher returns at higher risk. And over 10 years, you can see that it has bet the index at lower risk, and that's the kind. So that if that is your aim, if you want to try to beat an index at lower risk, or even at least keep pace with the index at lower risk, this is the fund for you. One good thing about this fund is many people thought that Quantum Long-Term Equity will be positioned as a large cap mutual fund after the SEBI categorization. It did a very smart thing of positioning itself as a value oriented fund, because if it went into the large cap universe, it can only pick stocks from Nifty 100 or the BSE 100. Since it's now a value fund, it has got the freedom to pick stocks from pretty much anywhere. So it remains a BSE 200 universe. So that's a very smart move by Quantum. So the chance of beating Sensex is that much higher for Quantum, I would say, and it will do so at a lower risk. You can also explore the downside protection and upside protection. For example, if you see the 10-year period, the fund has only captured 71% of the index losses, whereas and of course the category has captured 92% of the benchmark losses. In terms of the upside, the fund has captured only 91% of the benchmark's gains, but the category has captured 101% of the benchmark's gains. So it will produce alpha by downside protection, and in my opinion, that's the most stable kind of protection available. So even over 3 years, if you see, the fund has only captured 67% of the benchmark's losses, whereas the category has captured 103% of the benchmark losses. That's terrible. So this is the fund for you. What I would suggest is, this is your foundation fund. If you can. I have been suggesting aggressive hybrid funds or dynamic what is that called? Balanced advantage funds as the core of your portfolio. Quantum long-term equity can also be the core of your portfolio if you want, and use let's say Nifty Next 50 as use as the aggressive part, or you can use a mid cap fund as an aggressive part. It's up to you. There's many ways to build it. In my case, I have 3 funds for my retirement. One is the HDFC Balanced, Quantum Long-Term Equity, and Parak Parak. These are the 3 funds in my portfolio. All of them are defensive kind of funds. That is what what I prefer. I don't. I have made some, due to sheer dumb luck, I have made some money in the past because of that bull run in 2014, 15, etc. And I want to preserve those gains. I don't want stellar gains from now on. I just want, if I get 10% from equity going forward, I'm very happy, because my retirement goals have already been met. I don't need to take so much risk. But please recognize that taking more risk does not fetch you more returns. I would rather not take risk and hope on reasonable returns. That is my opinion, but many young people differ. I have a post for them also. I have compared large cap versus mid cap versus small cap, and I showed them taking more risk does not produce more returns for you. So you can explore Morningstar as well. So if you can go to the performance tab. Excuse me. If you log into Morningstar, create an account, you can get a little more advanced features. So let's load. That's taking it wrong. So if you log into Morningstar, you should be able to expand this. This is the performance graph. You should be able to expand this graph. Okay, oops. Okay, it's come. So you should be. So that's the graph. You can show it. Let me log into it again. So you can have the interactive graph. Here you can see you can put indicators like rolling returns, moving averages, so not rolling returns, moving averages, and so on. You can add another fund, but unfortunately, it will only show you the Morningstar code. This code means long-term equity, so you can change the frequency to daily, monthly, and you can also export the NAV and so on. So you can have indicators like moving averages, Bollinger Bands, MACDs, and so on. You can do all that. You can compare, but the comparison does not work quite well. I hope they fix it. It is not normalized. You can play around with it, but that's not what I want to show you. If you see the returns, you see the annual returns. In the last year, you see that it has been one of the top funds, and it is in the year to date. That is in the last 3 months, right? And it has been able to been able to beat the category a little bit, but it has not bet the index. It is still down by 1%. But in the last, but if you look at 2018, where there was a big fall, it has bet the category by about 10% and has bet the index by about 2%. And the fund return itself is very small, because it's only the fund return is only 0.6%, but that is 10% higher than the category average and 2% more than the index. So that's the kind of fund. When everything falls, this will hold. When everything moves up, this will move up a little bit. That is the kind of fund quantum long-term equity value is. You cannot expect it to be 5-star rated. It is 5-star rated here over 10 years, over 3 years, 3-star, and 2-star over 5 years. This is the kind of performance you should expect. 3-star, 4-star, 2-star. That is the kind of fund. If you are worried about peer comparison, this fund is definitely not for you. I can guarantee you that. This is for investors who don't care too much about that, who want decent returns but low risk. If risk management is the most important aspect for you, this fund will do great in your portfolio. So that's what I wanted to say in this review. I will catch you again in another video. Bye bye.